Good morning, everybody. Hope you had a great week this week. Markets really had a good week. Commodities rallied very strongly, starting on Monday all the way through Friday. December 22 corn was up 60 cents, and November 22 soybeans were up $1.60 at the close on Friday. On Friday, we did close at 14.73 on soybeans. It was the biggest weekly rally since 2004, so that was really nice to watch and have a big bounce for some relief in prices after the short-term declines we've had the past month or so. We had 6 straight days of good buying volume, and that really helped prices rally. Strength indicators are making a very nice positive trend. Really starting to look healthy and have a nice positive trend line forming. Money flows are very overbought in the short term. Long-term momentum is looking like it has bottomed out and turned positive, so that's kind of really the first step we needed to see in hopefully putting in a multi-month bottom. Price action still has to confirm that, but resistance is 14.75 on this contract, and the first price support is 14.38. What I'm hoping for is some price consolidation here to wear off some of the overbought conditions in the short term. So hopefully, 3 to 4 days we'll kind of trade where we're at in a range and consolidate. But the big thing is support really needs to hold at these levels. Otherwise, we could be testing back where we were. So hopefully we trade above support and keep trying to push higher. That's my goal. Managed money decreased their net position by less than 1,000 contracts through this past Tuesday. So pretty neutral reading on the week. They are still net long 87,000 contracts. In regards to corn, we closed on Friday at 622. Last week I mentioned 567 support was very important to hold, and it did, and we rallied very strongly off of it. Money flow is extremely overbought in the short term. Strength is working its way on a nice positive trend higher, so that's good to see. It is looking more of like a healthy reading. Long-term momentum is also making some positive moves. Hopefully that's potentially signaling a multi-month bottom as well on this contract. Again, price action has to confirm, and we really need to stay in this range to and not lose these support levels. 605 is support and $6.30 is resistance on this contract. Managed money sold 5,000 contracts through this past Tuesday, but still have a large net long position of 120,000 contracts. General updates. Commodities jumped higher this week after bullish weather news and geopolitical events that took place in Ukraine and Russia. Russia bombed the Ukrainian port at Odessa just after they agreed to let grain flow a couple days prior in an agreement with a few countries over on that side of the world. The United States crop conditions are projected to see yield decreases and continue to decline. Europe is projected to have a 20% loss on yield as they are experiencing a drought. The long-term forecast remains hot and dry in the U.S. here, especially in the western corn belt. They are really struggling pretty bad right now. So we will continue to see how that develops and what happens to crop conditions moving forward. Soybeans benefited this week from very high commercial soybean oil demand, and we really saw a strong rally on those contracts as well. Coupled with that, South America will also be out of soybeans to export by the end of August, which really makes the U.S. the major source of soybeans throughout the world. So a ton of export demand on our soybean market, and that is bullish for farmers. Commodity domestic and export demand is projected to remain high after harvest because of what is most likely going to be a short crop. This should give us favorable basis levels moving forward as well, so that is something to consider when you are looking at marketing your grain. On Wednesday, the Federal Reserve did raise short-term money rates by 75 basis points, and also Chairman Powell did mention that they would consider laying off more interest rate hikes moving forward, which did give some short-term relief in a lot of risk markets, and they liked that comment from Chairman Powell. In regards to crop insurance, schedules of insurance will be mailed out in August. These have your coverages and your bushel guarantees on them. If you need any help going through these and figuring out what those are, please give us a call. We'd be more than happy to help walk you through those. Other than that, we want to thank you for your business and hope you have a great weekend.